Hey, yo, before we jump into the video, I'm going to throw this quick disclaimer out there. I'm not a financial advisor. I'm not telling you to buy, hold, or sell. This video is strictly for educational purposes. This is just a tutorial on how to actually go on Robinhood and actually do an options contract. I'm not getting too deep into technicals, fundamentals, and which stocks you should use and all of that. If you hear something in this video that's incorrect, or you want to challenge it, that's fine. Leave a comment down below. Just make sure you like the video. I'm all about learning and education. I'm trying to teach people how to actually just log on and do options, and then we can learn about which ones to get and when to get. But with all that being said, as you can see, as this scrolls through, these are some of my recent option wins. So I do know what I'm doing. And holla at your boy, man. Make sure you like the video, subscribe to the video. It's your man, OG Bo Beats, and let's get into the real video. How to do an option on Robinhood tutorial part 1. Yo, what's happening? It's your man OG Bo Beats TV. Come to you today with another special video. What's good? What's happening YouTube? It's your man OG Bo Beats, and today I'm going to give you a quick tutorial on how to buy options. This is a beginner's tutorial, and this will explain basically how to go on Robinhood and to purchase an option. All right, it's a lot more that goes to it. It's a lot of risks associated with buying options. You will lose your money sometime if you don't know what you're doing. So I want to put this out there. This is not financial advice. I'm not telling you to buy, hold, or sell anything. I am just giving you some information that you could use because I know a lot of people are curious about this. So we're going to get this started. So I'm in Robinhood and I'm looking at the SPY. So the SPY is one of my favorite stocks to buy options with. The SPY is basically an ETF on Robinhood and on trading platforms that mimics the S&P 500. If you don't know, the S&P 500 is one of the big indices along with the Dow Jones and the NASDAQ. So basically the SPY mimics that by following the pattern, whether it's going up or going down. So we're going to get into the SPY, one of my favorite stocks. I make a lot of money off the SPY, so just follow along. All right, so let's jump right into it. So go down to where you see trade at, click on that, and then you're going to see trade options or buy. Click on trade options, and then at the top of the screen, you should see a bunch of dates. You got today's date, June 5th, June 6th, June 7th. So basically, these are the expiration date for the option. The SPY has daily expiration dates, and most stocks will have weekly expiration dates, just so you know. All right, so we click on today's date, and then at the top, you can see you got buy, sell, call, put. So we're going to buy a call. Selling a call is a total different class. Buying and selling a put is also a total different class. Today, we're going to focus on selling a call. All right. All right, so first thing I want you to notice is in the middle of the screen, you see share price, which is $428.54. That is the current and active price of SPY. So that'll be the price for any stock that you choose to do options on. It'll be in the middle of the screen. So all of the contracts above that are called out of the money contracts, and all the contracts below that are called in the money contracts. The biggest difference is basically the in the money contracts, they will cost you more and they are closer to being the actual price of the share price. The out of the money contracts will cost you less, and it will take you longer to make profit on those, but you can still make profit on those and spend less money to get this whole thing started. All right, so when you look at these contracts, like we'll focus on the 429 call that's right above the share price. You see on the right side, it says 21 cents. So basically what that is $21 for this contract. So you times all of these numbers that you see on the far right by 100 contracts, because that's what buying stock options are about, basically buying 100 contracts. So this will cost you at the moment 23. It's going to fluctuate as we do this video. The one above it, 5 cents, will cost you $5. The one below it, the 428 call, will cost you $76. All right, so keep that in mind when you're trying to figure out which option you want to buy. You got to do which option you can also afford to buy. Also, if you look under where it says 429 call and you see break even and you see a price of 429.22, and then next to that you see 2 break even and you see 15%, that's just basically telling you for that particular call contract, what the break-even price is from the share price and how much a percentage it'll take you to break even, but we'll get into that a little bit later. All right, so now we're gonna click on 429 call, and when you click on it, you're gonna come to this screen. So at the top left, you see bid, and at the top right, you see ask. So those basically the price of the contract that you already plan on paying, but you can bid a couple dollars lower sometime to see if it'll catch under that. But if you do the ask, you'll usually get it right away. All right, then you see mark, last trade, and IV. So IV, implied volatility, is very important because the volatility of the stock, whether it'll go up or down, matters. You don't want to get something that has a high implied volatility because that means you may lose some money quicker than average. All right, go down to the next section. You see previous close, high, and low. So that's just the previous close and the high for this particular contract and the low. All right, then you see chance of profit. All right, 23.65 is going to tell you your chance of profit. The volume is how many people are actively in this contract right now, buying and selling. So that's a very, very big number. So pay attention to volume. I always look at that because that tells me how many other people have the same idea as me. So 273,000 is a lot. All right, open interest, same thing. How many people are currently looking to buy this option? All right, so you go down to the Greeks, and again, this is a whole nother video for the Greeks. I want to talk about the delta. So the delta is basically the number that's going to tell you how much money you're going to make using this contract if it goes up. So basically, for every dollar that the stock goes up, you'll make that amount, whatever the delta is. So if it's 0.50, you'll make $50. If it's 0.38, you'll make $38. All right, so the other thing I want to talk about is theta. Theta is very, very important because that is the time decay. So that will basically let you know how fast and how much the option will decrease because, again, it's an expiration date on all options. You can't hold them for a long time. You know the expiration date that you chose. So the closer you get to that expiration date in time, which is pretty much 3:30 for most options of the expiration date, you're going to lose money. It's going to close out at zero if you don't close it out. But like I said, go and watch a video on your own to learn about the Greeks, but it's very important. All right, so once you determine that this is the actual contract that you want to buy, the next thing you're going to do is click buy, and it's going to bring you to this screen right here where you can decide how many contracts you want to buy. Now, you can buy multiple contracts. One contract is going to cost you the price of that contract premium that you originally saw at $19 or $21, but you can also buy quantities. You can buy two. It's going to double the price that you have to pay. You can buy 5. You can buy 10. So it's up to you. I would recommend for beginners to start off slow, buy one contract. Just keep in mind that you can't lose any more money than you put up. So start off small and work your way into it. So that's basically it. It's a lot more to it. That's just how to actually buy the contract. So learning the technical analysis and when to buy, when to take your money out, all of that stuff is a different video. We'll get to that eventually, but I just wanted to make sure that I explained how to actually go on Robinhood specifically and purchase an option. So another thing I want to say is if this is brand new to you, make sure you have your options trading enabled on Robinhood. And like I said, you can actually just practice and not jump right into it so you don't lose money. Like I said, this is a very risky thing. And I've lost money. Some of the best traders have lost money, but it's ways to mitigate the risk with things like a stop loss and reading the charts and understanding that. So that'll come in due time. But for right now, this is all I wanted to show you. Make sure you like, subscribe, comment on the video, ask any questions. It's your man OG Bo Beats, and I'm out. Peace.